In Stacking Up today, Tom White of TD Ameritrade is here to talk about a couple of, what should I say, alleged scandal stocks. Good to have you on the show today.
Good to be back.
Starting with Exxon. Now, there's some accounting practices that are under review by investigators. What do you see happening with this stock?
Not much good. When the SEC does these investigations, there's typically fines involved. There's typically some downside, some volatility in the name for a little bit. They've got a lot of cash on their balance sheet, so typically what happens is they'll investigate, they'll fine them quite a bit, but we're going to see some volatility in the meantime until that investigation gets over with.
Where do you think this stock is going?
Well, we saw a lot of put buyers on the 80 strike all the way down to the 75 and 70 strike a few months out. What that's telling me is that speculators are in the name right now, trying to take a position in there based on that there's going to be some additional volatility in there, maybe some downside.
Also under investigation, Wells Fargo. This scandal is not going away.
No.
What do you see happening with this stock?
Oh no, that the testimony from the CEO was it was painful to watch for a little bit, especially if you're a shareholder of Wells Fargo. We've seen triple bottom in there around that $44.50, $45 level. What we're seeing in Wells Fargo is we're seeing a lot of volatility get added into the market, but also a lot of people selling puts, because if that triple bottom hits again around that $44.50 level, there's going to be buyers in there. It trades at 11 times right now, and the dividend yield is above 3%. So right there, you've got people looking for yield, and where you're going to find it is these banks, because valuations are extremely low in there.
Let's move on to what's going on with Microsoft. Now, this is a very positive story, I would think, for Microsoft.
Yeah. 8% dividend hike, and they're buying back another $40 billion of their stock. They had a $40 billion share repurchase expire this December, so this is just an additional buy, and I think a lot of traders and a lot of investors were expecting that, as the stock is just below all-time highs, just under $60 a share, and what we're seeing in there is the 50-day moving average it just bounced off of there. Even though it had weakness earlier in the week, it bounced off there multiple times. So we're seeing a solid bottom in there on a technical level. But if that $60 share price gets hit, which would be all-time highs, based from 1999.
This has been a beautiful stock for long and hold people.
Yeah, it has been, because it pays a great dividend also. So even if there was no price appreciation from 1999 until 2016, you're still collecting that dividend. The company's got cash on their balance sheets. The new CEO has been doing awesome. They got rid of Ballmer, which was a big plus for shareholders. So we could see some more upside in there. The old tech is becoming the new tech again as they kind of rework their business.
We're noticing that.
Yeah.
Thanks for coming on the show. That was great.